and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and open the stage to get all your portfolio-related queries answered. But before that, very happy Dussehra to all of our viewers. But Cheryl, talking about the markets then, though the benchmark indices are seen to be drifting in the red, but it's the breadth of the market, the broader markets, that's seeing a sharp knock.
Absolutely, Shrishti. A very good morning to you. And on the outside, let me wish all of our viewers a very happy Dussehra in advance from the entire team ET Now, especially the team Buy Now, Sell Now. But talking about the markets, yes, not a pretty picture coming in for the markets, be it the benchmark indices or the broader markets. Broader markets on your screen, as you can see, 1.3% downtick coming in for mid-cap index from the day's highest point. If you look at the small cap index as well, the cut is much sharper from the day's highest point when it comes to the small cap index. Almost 2% downtick from the day's highest point coming in for small cap index. No doubt both of them are trying to make some sort of a recovery right now, but that doesn't seem to be meaningful given the fact that the sharpness or the gravity of the fall has been pretty sharp over the last few minutes or so. Talking about the benchmark indices, yes, we are in the negative territory, but doing much better than the broader markets. You have Nifty Bank also that's moving in tandem, and that one also is trading lower right now. Let's talk about some of the stocks that are in focus. Yes, no doubt you have Kotak Mahindra Bank that will be in focus. Apart from the earnings, the bigger headline being that the bank now has a new MD and CEO, and that too not an internal candidate, it's an external candidate who will be helming Kotak Mahindra Bank going ahead. Talking about the other stocks that are in focus, you have Bajaj Finance that's trading with the gains of about 1%. You have a note that's coming on from Macquarie on Bajaj Finance, and that's why the stock is reacting to that note. You have Dr. Reddy's, ICICI Bank, M&M as well as Nestle among the top gainers in trade, and very mild gains coming in for all of those counters actually. Sub 1% is the gains. While talking about the losing end, you have Adani Enterprises, Adani Ports among the top losers on the Nifty, followed by Tata Steel, Tata Motors, as well as Grasim. And like Shrishti actually mentioned, the breadth of the market, if you look at it, it is meaningfully on the favors of the declines right now. So yes, advanced decline ratio in favor of the declines. Talking about the sectoral indices then, none of the sectors are in the positive territory. All of them are actually slumping in trade, with media index being the biggest loser right now, 2.5% down for media. Realty, metal are the other pockets that are declining in trade today, Shrishti.
Okay, well, let's move on and let's shift focus to two counters in particular. On one side, you have Kotak Mahindra Bank that is in focus on the backdrop of a new appointment of Ashok Vaishnavi, who is the MD and CEO of the bank. But what does it mean for the bank going forward? Let's revisit Nikunj Dalmia, Managing Editor, ET Now and ET Now Swadesh's take on it.
From last 1 year, there was speculation that there were two internal candidates and there was one external candidate. The choice of an external candidate, so the bank must have had given three names to RBI. RBI ultimately gave the final verdict or the final decision. The question you would ask yourself is that why there is no internal candidate and why an external candidate? So Kotak Mahindra Bank, in a sense, is a bank which is built on trust, great risk management, supreme customer satisfaction, and great adoption of technology. Can Mr. Vaswani really take it forward? And was there no one internally which could have really taken the baton from Mr. Kotak? So in the near term, we've seen that even a bank like HDFC Bank has suffered. Markets know that the CEO at the top matters. A case in point here is the Chanda Kochhar era versus the Chanda Kochhar era for ICICI Bank versus Mr. Bakshi's era. So the CEO and the managing director of a bank, irrespective of what the lending practices are, does matter. So now markets would be curious, some would say anxious, to understand that how the migration would move. Uday Kotak has built a franchise, an unforgettable franchise from an unknown franchise to an unforgettable franchise. Can Mr. Vaswani do the justice to him? And that will be answered in due course of time. And that, in a sense, will inject this extra element of uncertainty. Both in terms of the FI positioning and also in terms of market positioning, the stock is not really in any kind of a momentum groove. So while markets and institutional investors will take their time to digest, in the near term, I think Kotak Mahindra Bank, the underperformance, I think will just become more and more stark and more real. However, I don't expect a very sharpish kind of a reaction simply because the stock has become cheap. It is trading at valuations which are pre-ALN-FS, and then so I think the sheer valuations and the sheer underperformance in Kotak Mahindra Bank, I think in a sense will restrict the downside. But everyone thought that it's going to be an internal candidate, and that internal candidate will just mark continuity, and that whole concern of succession planning would be over. Now markets would say, okay, we're not saying no, but we need to examine the new external candidate. And then the question is that why was the choice of an internal candidate really rejected? These are questions which are genuine questions. Time will answer. Can Mr. Vaswani make Kotak global? That's the experience he comes with. Because ultimately, Mr. Kotak has chosen somebody who understands his DNA, who understands his lending culture. But markets will take some time before that convince. So in the interim, the stock which is underperforming will continue to underperform. And when you see delivery coming out in next 2, 3, 4 quarters, that's the time I guess you would actually see the market revisiting this whole handover thesis.
All right, so that's the take coming in from Nikunj Dalmia, who is the managing editor of ET Now as well as ET Now Swadesh, talking about Kotak Mahindra Bank and what this pretty significant move actually means for the bank going ahead. And as you can see, the stock is pretty subdued in trade. No doubt it's made a good recovery from the day's lowest point. At one point in time, the stock was trading in lower in excess of about 2%. Now it's trading lower by about 1% or so. But let's talk about one stock that is zooming away in trade today, and that definitely is BSE. The brokerages have sounded very bullish over the stock. Firms like IIFL, Investec, they've in fact gone ahead and upgraded their ratings. But why have they done that, and what's actually making them so bullish about BSE? Let me take you across to my colleague Vamakshi to outline that for us. Vamakshi, over to you.
Well, yes, BSE in focus. The company earlier announced that they will be revising their transaction charges earlier than anticipated in the equity option segment. Now, largely we have two brokerage notes coming in on the same, and there is a massive upgrade that has actually come through from Investec. They've gone ahead and upgraded their rating on BSE from hold to buy, and there's a massive upside that they see in the stock because they've gone ahead and hiked their target price on this counter from 540 rupees per share to over 2,140 rupees per share. Largely, they have highlighted that nearly 4 times hike in the transaction charges increases the earnings visibility for BSE. Not just that, also the Sensex option volumes have been rising at a remarkable pace, which actually in turn is a very positive indicator for BSE. So all in all, given those factors, Investec has actually gone ahead and increased its FY24 and FY25 revenue estimates by 5% and 30% respectively, and has gone ahead and increased the net profit expectations by almost 11% and 67% respectively for FY24 and 25. Apart from that, IIFL has also gone ahead and upgraded its rating on the counter from add to buy and hiked the target price from 1,600 rupees per share earlier to 2,000 rupees per share. And they also believe that this could be a positive indicator for BSE. They believe that the BankX especially could be in the next growth driver, and they've in fact upgraded their FY25 and 26 EPS estimates by around 25 to 35%. They believe that momentum in BankX as well as further tariff increases could drive the earnings surprise as far as BSE is concerned. So all in all, brokerages are indicating the increase in the transaction charges in the equity option segment as a positive for this counter, and that is the reason why the stock is soaring in rate as of now.
Well, thank you so much, Vamakshi, for taking us through all those details why BSE is soaring in trade today. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now, Sell Now. Don't go anywhere. As we come right back, it's time to take all your stock-related queries, so stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on our WhatsApp number. That'll be flashing on your screen very shortly. Do remember to mention your name, the stock that you're looking to invest in. Also, do mention the buy price, the quantity if you've already invested in the stock. And please do not forget to also mention the time horizon. That's very crucial because in that way, we will know which expert to ask your query to. And talking about the experts, today we have Kunal Bohtra as well as Ashish Kapoor joining us on the show. Very good morning to you, Ashish, as well as Kunal. Thank you so much for joining us on ET Now. And let's begin the show by taking the first query we have. And this one is coming in from a viewer who's wished all of us a happy Dasera. This one is from Rani, as what I can read from the WhatsApp name. And happy Dasera to you as well, Rani, and your family. She wants to know, Kunal, if she can buy ICICI Bank at current levels for a period of just 3 months. And if yes, then what sort of a target should she eye for ICICI Bank?
Good morning, Cheryl. Good morning, everyone, as well as happy and festive greetings to all the viewers of ET Now, as well as everyone at ET Now. Now, in terms of ICICI Bank, I'm extremely bullish on the stock price. So my sense is that many of these banking stocks, ICICI Bank, HDFC Bank, etc., these stocks have come back to their 200 DMAs. Even ICICI Bank on the technical front, I think it's just about some 3% or 4% away from its 200-day moving average retest. This could probably complete a major retracement as well as a mean reversion for ICICI Bank. The stock has been more flattish over the last many months, but when you look at this in terms of the prospect from here on, I would believe that the risk reward is in favor of going long. If you're looking at it as a 3-month to maybe 5-month kind of a target time horizon, then I would look out for 1,000 plus as a target for ICICI Bank.
Okay, moving on to the next query then, and Ashish, very good morning to you and festive greetings to you as well. The next question that I have is coming from Mani Rajulu, and he wants to invest in any of the 3 counters for the next 5 years. Wants your advice on IDFC First Bank, J&K Bank, as well as Usha Martins. So any stock that you like amongst the 3?
I think I can safely recommend IDFC First Bank. I think that is clearly a very good stock for long-term investors, and I think the bank is doing in fact quite well. Even the ground reports which I have got are customer satisfaction, the spread of the bank at the ground level, the kind of branches they are putting up, and the kind of valuation projection which you can do on this over the next 4 or 5 years is fantastic. So I think no brainer in this. IDFC First Bank is what you should choose, and you should buy out of the 3 stocks which you have shortlisted.
All right. The next one is coming in from Ayush. Kunal, this one is for you. He already has Thomas Cook at a buy price of around 70 rupees. Kaplan Point buy price is 704 rupees per share. He wants to know if both of these counters are good to stay put with, or should he look to book out profits in these counters? If you say he can stay, then he has 1-year time horizon.
I think you should definitely stay put in Thomas Cook at least. I think that's a chart which is still looking formidable. I think if I'm not wrong, those the very sharp movement for Thomas Cook from 80 odd levels to 100 plus 3 months back, I think in the month of June, July. And then from there, the stock has moved up another 20% on the upside to 120 plus levels where it's trading right now. So I think it's a stable chart. 100 could be a major base for the stock price. I don't expect the stock to come back towards 100 levels, but in case of the situation in the market gets a bit more worsened, then I believe that's a major support for the stock price. So you can continue to hold in that regards. Kaplan Point, on the other hand, the stock, even though it's today broken below the 50-day moving average, the concern for the chart is the stock has given a bearish head and shoulder pattern on the weekly chart. So I would probably sense that the stock may get into a further corrective mode. So Kaplan Point, what I would suggest is keep a stop loss of 1,000 on closing basis. In case if the stock closes below the 1,000 level, you can look to exit the stock.
Okay, Ashish, the next query is on Voltas. A viewer named V. Ravichandran has bought the shares from a price of 890 rupees. In the results, even Voltas and Havells, they didn't. The results were disappointing this time. But Ravi can hold the stock for the next 3 years. So can he average out this particular counter at this point in time?
Yeah, certainly he can. I think Voltas also, the problem was run-up was quite a lot. I mean, one, of course, maybe results can be arguably little less than expected, but also the run-up was very significant. I think Voltas is going to do very well. I think that generally the demand for air conditioning and also the white goods is going to really be very robust in the next few years here. And Voltas is very well established. So I don't see any problem as long as time is with you. I think stay put, and yes, on the downside, try and buy more in a staggered way. It is a stock which I think in the next 3 years should give you very decent returns from here.
Okay, this one is coming from Sunny. He's writing to us from Mumbai. Kunal, for you, a good time to buy Reliance and HDFC Bank. He is willing to hold for 6 months.
Well, 6 months may be a bit of a short-term time horizon for both of these stocks because these stocks are going through a huge streak of underperformance as well as a flattish return for the last 1.5 odd year. Now, I don't, in a sense that there could be an immediate lift off into the stock price. But yeah, I think in terms of the levels, these are good levels where you can look to buy both of these names. I think if I'm not wrong, Reliance Industries is already below the 200 DMA, and even HDFC Bank I think is below the 200 DMA by a margin of 5-6% approximately. So both these stocks have already gone through a correction, mean reversion, and maybe buying at current levels could be a good risk reward play. The only concern is with the time frame, which I believe is too short term for these kind of stocks to give you any kind of a great outperformance.
Okay, Kunal, the next question is from Venkat Rao, and he's holding 80 shares of Divi's Lab from a price of 4,300 rupees, close to that level, and sitting at a good loss at this point in time. So, good time to average this particular counter, or stay put with the investment, or book out, or book the loss?
See, I would believe that you can just hold on to the stock. I'm not too optimistic on the prospects of DV Slab over the near term, because I think my sense is that the major part of the bounce or the rally has already happened for the stock from sub 3,000 levels to 3,600 or 3,800, where the stock was trading a few months back. I think it's a better strategy if you can look to adopt to maybe shift from DV Slab towards a few other larger cap pharma names. I believe that Sun Pharma, Dr. Reddy, Cipla and Lupin, I think these are the 3 or 4 names which are looking quite strong in terms of the charts. These stocks have managed to outperform also in the last 3-6 months, and given the markets where we are into, it would make a lot of sense to hold on to pharma stocks. So not an exit on DV Slab as such, but you can definitely look to switch from the stock to maybe some other formidable larger cap pharma names.
All right, this one is coming from Padma Siva Rao, who's writing to us from Bangalore and wants to know whether it's a good time to buy Havells. What's your take on this one, Ashish? Do you think Havells is a good stock to hold in your portfolio right now? And now is the time that you can look to buy this one?
Yeah, very good stock, very good company. Also, the industry growth is there. Valuation is the only thing which one can debate on. So my sense is that there is, at least as per me, I think there is going to be a little volatile period going forward from here, and most of these stocks will see some downside. On the downside, I am very confident that one should be buying stocks like Havells for the long run. But don't. My only advice would be not to buy everything at one go. Try and be patient. I think markets are going to be choppy going forward, and you will get good entry levels. So keep Havells in your radars and look to buy at every decline. And for the longer term period, maybe at least 3 years, you should make good money and then.
Kunal, what's your advice on SBI cards? Narayan from Chennai wants to know, is this a good time to enter at current market price in SBI cards?
Well, I think current levels could be actually good levels to enter the stock price. It's at 775, 778 on the spot. It's trading below the 200-day moving average by a margin of, I think, 10% or 8% to be precise. And I think the indicators have also mellowed down for the stock price, which means that the stock may not correct very sharply or not deviate too much from the 200-day moving average. So time and again, it would probably go through that retest of 200-day moving average or just fluctuate around those levels. So a 10% swing below the 200 DMA is generally considered to be a good point where you may look to buy this formidable large cap name.
Right. Kunal, one more coming your way. Satya is writing to us. He's saying few of his holdings have already hit stop loss today. So now he wants to know, is there anything that he can look at buying right now with a period of 3 to 6 months and with a stop loss that you can provide with him?
Well, it's difficult to now look out for more buy calls in this kind of a market, because it becomes a lot more choppy when the markets and the mid caps go into a correction. So you can maybe go back towards the traditional FMCG stocks in this kind of a market, because FMCG and pharma, these two become the relative defensive sectors which may tend to outperform. HUL and Britannia is something which I would recommend at current levels, but keep a stop loss of 2-2.5% if you're looking at it as a swing trade.
Okay, so that's the take coming in on all these FMCG names. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now, Sell Now on ET Now. Let's keep it going with all your stock-related queries. And the next question that I have is from you, Ashish. Actually, the viewer name is also Ashish, and he's holding 850 shares of Star Health. His average buying price is 570 rupees, but his investment horizon is for the next 3 years. So how do you look at Star Health in the insurance space? Should he stay invested for the next 3 years?
I think so, yes, because firstly the company is doing quite well within the health insurance space. It is quite well established, doing well, and I think the industry itself is going to really grow. So if it's long term in time and order constraint, I don't see any reason why this will not give you good returns. This should give you very good returns as the penetration increases. And I think health insurance is something which is really catching up as the medical costs everywhere are going up. And within this segment, they are very well focused and also very well established. So I am pretty bullish. I think 3 year plus horizon, you should stay invested.
Next query is for you, Kunal, and this one is coming from Amit Sood, and Amit has decided to put you in a spot with this query that he has. He wants your view on BSE. He's saying he's holding about 150 shares at a price of 504 rupees per share, and he's saying every time he thinks about booking profits in BSE, one or the other analyst refrains him from doing so and gives higher target for BSE. So he wants to know now, what's your opinion about BSE? Would you also tell him not to go ahead and book profits, and if I give higher targets for this one, or would you differ?
In fact, this is a positive sign for you that the stock has been doing pretty well and you've been getting higher targets for BSE. Congratulations first, because you bought at 500 and the stock has almost tripled from those levels to 1700, 1800, where the stock has been hitting highs today. I think the concern now for BSE is the short-term charts, which are getting into a bit of an overbought territory. But the stock is not overbought into the weekly or the monthly time frame charts or even the higher time frame. Now, I think in that aspect, this indicates that maybe from a short-term play, you might see the stock correcting by 8-10% kind of a margin. But then I'm sure that that's not what you're looking out for. You're looking out for something which spans in the time horizon of 1 year to 2 years at least for BSE, which should be a significant potential of upside even from current levels. So I would suggest to stay put with the stock price if you have that kind of a time horizon.
Okay, Ashish, the next question is coming from Ajay, and he has his eyes on 4 stocks and wants you to pick amongst any of these for a fresh buy at this point in time. He's looking at Central Bank, PNB, Geo Financial, as well as Hoodco. Can he enter at current market price in any of these stock mentioned above, or wait for some more downside?
Look, it's a question of faith. I think Geo, according to me, nothing at the current level creates any confidence, but the fact that they are very, very well established and they have got a lot of capital base with them and the backing of a huge group, and the industry itself is growing at a phenomenal pace. So Geo Financial is a leap of faith. I think you can buy that because, and I think it's reasonable to buy now because it has corrected fairly from the highs, and you could start buying. Maybe try and stagger your purchase and buy. The other two, see, CBI and PNB both are public sector banks, mid-cap space. So my own opinion is that the public sector bank space is coming into its own after a very, very long period of time. I still think there is much more upside left here. The stocks will be very volatile. So if you are okay with choppiness and have a bit of a risk temperament, then certainly both. I would prefer PNB, but even CBI. Both are actually looking good. As long as you can expect, when you can expect volatility, and if you can okay with it, you can tolerate that kind of ups and downs. So both of them are looking fairly good. I think the next 1 year, all these banks should trade much higher. So both CAB and PNB, you can make money. Geo is a leap of faith. Hoodco, I would like to avoid. I think that it's a rank underperformer, and there's nothing in it to, get any confidence that the things are going to change now. So CBI, PNB, if you are okay with a bit of risk but high return, and Geo, if you can take a very long-term view and have the faith in it, I think it will make you a lot of money.
This next one is coming in from Pratiksha, who's writing to us from Oman, and Pratiksha has Bank of Baroda, Kunal, at the price of around 220 rupees per share. She wants to know what's the correct price to go ahead and average this counter. Also, SBI, she wants to know what's the right price to average. Both of these counters she's willing to hold for approximately 6 months or so.
So my sense is that Bank of Baroda can actually come back towards 180, 185 mark before it finds any kind of a major bottom formation, which means the stock could correct by at least another 6-7% broadly from current levels. SBI on the other hand, I believe that maybe closer to 540 is where the stock can find a major support for itself. It's already reeling below the 200 moving average, but then the margin below the 200 DM is just 2-3%. My sense is that it could probably extend to 6-7% for SPI, and that could probably take the stock towards 540 odd mark. That could be a point where you should look to average the stock, because I think that would be a very good point where I would believe that the stock may show signs of significant support. And for Bank of Baroda, as I said, that the 200 DMA is closer to 180, 185 levels. So that's the zone where you should look to average further.
Okay, moving on to the next one. And Kunal, the next query is from Prathamesh from Mumbai. And he has asked specifically to you on two auto ancillary names, Uno Minda as well as Subros. Can he buy any of these names with a 1-year investment horizon?
Well, Subros is something which I would not advise at current levels. It's a bit volatile stock. I think from June highs of 350, the stock went up to 500 in a matter of, I think, couple of days. But then from 500, it's come back towards almost the 350 mark in the last 4 months of the correction. So, which means that the rally which had happened for Subros was more of short-lived rally, but the correction is a bit more extended. I would actually expect the stock to maybe come back towards 350 mark or even below those levels. So if you're looking at a buy, I think maybe 350 and below could be a better price to buy the stock. Uno Minda, on the other hand, the stock is a far more stable stock. I think even the last 1 month or 2 months, the stock has flattened out at the 600 levels. It's closer to the 50-day moving average, has a less tendency towards retesting towards the long-term averages. So I think in that aspect, this could be a better stock. But Subros, you can look to buy maybe below 350 levels.
All right. The next talk, or rather, the next query that I have is coming in from Tushar. He's writing to us from Delhi. He wants to know about Concord Biotech. He wants to actually accumulate these counters right now, Ashish, and he is noting the fact that this particular stock is in a niche API business as well, and you have also significant holdings from top investors as well in this particular counter. So he wants to know whether he should look to average it right now, and he wants to hold the stock for the longer term.
I think so. I think the fundamentals are very much in place. Now, it's obviously a little in an industry where you have to have a lot of patience and again believe that some of their products will eventually do well. The backing is very solid, and yes, you are right. There are a lot of investors also in it, marquee investors, and also the background and of the company is very encouraging. So I would think that yes. If you have the temperament of holding on for a long period of time, then this could be a great stock to have in your portfolio.
Okay, Kunal, the next query is coming from Tara, and she is holding 50 shares of GSK, entered 6 months ago, wants to know how the chart's looking like for this one. She's a long-term investor though.
GSK, that's Glaxo. Very illiquid kind of a stock. Now, if you're holding to the stock price, you can continue to hold on, and the only reason for that is because the pharma rally has been looking quite strong, and it seems like the pharma rally can sustain for some more time. And given the kind of markets we are into, it also makes a lot of sense to have more tilt, or at least some portion of a portfolio tilted towards defensive. So I think in that aspect, you may hold on to Glaxo, but I don't suggest to add at current levels. Because of the way the stock has been extremely illiquid in nature. If you're looking to add, as I said earlier, that maybe the other larger cap pharma names like Sun Pharma, Dr. Reddy, Cipla, Lupin, I think these are better names to add.
All right, this next one is coming in from Pramod, who's writing to us from Thrissur, Kerala. And Kunal, he wants your view on IGL. Actually, I will take this one to Ashish instead, because he's bought IGL at a price of 410 rupees per share, Apollo Microsystems at a price of 73 rupees per share. He wants a 1 to 2 year horizon on both of these counters. Ashish, we know IGL definitely was marred by the news flows that has been coming in, but over the longer term, or at least for the next 1 to 2 years, makes sense for Pramod to stay put with both of these counters, Apollo Micro as well as IGL?
Well, IGL, I would say no, because what has happened is a clear negative development for the company. Because if electric vehicles are going to be encouraged the way they are being encouraged, then certainly a very large part of their business comes from auto industry, and that does take a big knock. And I don't think the house gas supply system can really take care of that fall or impending fall in revenue. So I think there are many better ideas than IGL, so clearly avoid. The other one was Apollo Micro.
Apollo Micro was the other counter
Yeah,
that the viewer
that
has.
one, Apollo Micro is a very small, much better company. I think that you should look at averaging on the way down and buying for the long run.
So that's the take coming in on both of these counters. But for this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. And the next query that I have is coming in from Balan. And happy Navratri to you as well, Balan, as well as to all of our viewers. He is saying, Kunal, that as the markets are pretty choppy, he wants to know whether he should look ahead, look to actually sell some of his small and mid-cap portfolio stocks that he's holding in his portfolio currently. So he has Mukund Industries, Avanti Feeds, Vardhaman Special Steel, Adani Power as well as GMDC. Do you think it's advisable that he exit these counters? He's not mentioned whether he's making profit or so, but I'm guessing maybe he's making mild bit of profit, so he may be looking to book out some profits.
Yeah, I think Mukund, for example, GMDC, these are very high beta stocks, which you've mentioned, and I'm assuming with the assumption that you're sitting on good profits into these stocks, it makes a lot of sense to try and chop out beta from your portfolio. So I think by that I mean to try and book profits over here. If you want, just maybe book 50% of the profits, because the market correction is a bit more sharp today. You may probably expect a mild bounce before the market gets into maybe further leg on the downside. So I think in that aspect, maybe you'll get a better price to try and exit your full quantity. But I think partial profits at current levels to book could be a good strategy.
Okay, moving on, and Ashish, the next query is from Sambi Reddy, and he's holding 200 shares of UPL, but from a price of 660 rupees, at a loss at this point in time, but he can still hold on for the next 18 months. So what will be your advice?
Well, my advice would be not to stay put with UPL, simply because last 3 years I've been hearing all kinds of stories about it. Nothing has come true. There was possibility of a merger and this company becoming one of the largest in the world in agrochemicals. Nothing of that happened. And every now and then that story comes back again. So obviously there is no great stuff happening in this company. I think it would have happened by now if it had to. And also I think within this space there are many better options, frankly speaking. So why stay with a company which over the last few years has done nothing but disappoint investors? I don't see any merit in doing that. And frankly speaking, the results have not really lived up to the expectations continuously over the last several quarters. So clearly an underperformer here, and time to move out. In this, even if you have a loss, I think you should still book it and put your money somewhere else.
All right. This next query that is coming in is from Nagesh. He's writing to us from Bangalore, Kunal, and he has Dixon Tech 5000 call option November series, as well as PVR Inox at 1660 call option November series. He wants to know what should he do with both of them.
See, I believe that in this kind of a market, it would probably be attractive to try and buy out of the money call options for stocks which have been correcting, or at least stocks which have been a bit more resilient. But that may actually not work out to be a good strategy. Historically, what I've seen is that when you see such kind of a sharp correction, even if the stocks drop, say, by the first week of November, then I believe that the premium for the options would reduce drastically, and that could probably delay stocks coming into profits in your portfolio. I would sense that maybe try and look out for December series expiry or option trades, because you'll have a lot of time in hand. I'm not sure whether the options are liquid enough or whether these options have opened up for the December series, but I think buying it for that kind of a month could be a better strategy.
Okay, that's the take coming in on this particular counter. But moving on to the next query then, and Kunal, this query is for you. This one is from Sudha. She's a trader, and she's holding Vinity Organics. For the short term, she's holding 12 shares from a price of 1930 rupees. What to do at this point in time? Is that hold or exit at current levels and book losses?
See, I think Vinity Organics has been trading below its 200-day moving average. I'm not sure of the rationale of picking up the stock, but my assumption is that maybe you would have picked up the stock at a point when it was about to break past about the 200 DMA. So I would suggest that you can just hold on to the stock. there are few false attempts to the stock price above the 200 DMA, but then there could be very soon a pickup of price action. So the next time when a stock crosses above the 200 DMA, which I believe could be closer to 1800, 1850, 1870 mark, that could be a point where you may look to average further.
All right, that is the take coming in on Vinati Organics, and that indeed is the last query that we are taking for this episode of Buy Now Sell Now. Thank you so much, Ashish, as well as Kunal, for joining us on the show and also resolving viewer queries. And viewers, right now we have the management of Hindustan Zinc joining us on the show. We have Mr. Arun Mishra, who is the CEO of the company, joining us right now. Very good morning to you, Mr. Mishra. Thank you so much for joining us on ET Now. And let's talk about your numbers in the quarter gone by for Hindustan Zinc. Sequentially, the revenues have actually seen a dip, and this primarily due to the fall in the zinc prices. But first, let's talk how has the demand been in the zinc market? How is the zinc demand environment on ground, both domestically as well as globally? And also at the end of the quarter one, you said that you had expected the zinc prices to rise by the end of the year. Given the volatility that we are seeing in the prices, do you still believe that the zinc prices are poised to go higher going ahead?
So first, let's start with global first. Globally, the zinc demand has not been as to our liking. The slowness in demand pickup is still there in Europe. US also has not grown very fast. China recovery has not happened. But in the middle of all that, Indian economy is a bright star, and in India, demand is very strong. And we have got best of the best domestic sales. Even in September, we have sold for one of the highest numbers in domestic sales in the month of September. So demand is strong in India, but till the time globally the demand picks up, the LME is not going to correct, so which is currently at $2,400 per ton. My expectation that for next 4 to 5 months, it will still be range bound between $2,400 to $2,600 per ton. However, our ability to remain profitable up to the extent of EBITDA percentage of 46% at $2,400 per ton shows our ability to cut costs in the face of low LME. That ability is proven, and we will continue on the drive to even produce better results in the coming quarters.
Hi, very good morning, Mr. Mishra. Talking about your FY24 guidance, so interestingly, you have retained your FY24 production guidance, but just wanted to understand that given the macro concerns, do you see downside risk to your guidance?
We don't have any. Indian demand is strong. We will be currently Indian market. We are about more than 75% market share. We want to take it up to 85%. Demand is strong, and whatever we export between the continents of Southeast Asia, our neighboring countries, Nepal, Bangladesh, or even Middle East. So absorption of that amount of material is not a big concern to us. However, LME still remains a concern, but as I said, being fully integrated operation with our own mines and our ability to produce at an EBITDA level of 46%, we will remain very profitable, very much cash generating, even at this LME.
Ask a very pertinent question that I'm sure the street was also awaiting your answer for, and that is, we haven't seen any progress on the Zinc International deal with Vedanta for over 6 months now at least. Is it completely off the table?
Yes, it is time burnt because the annual general meeting AGM is over, so there is no chance of taking that decision which were taken in the board to make it effective. So if at all it has to happen, it has to come as a fresh proposal and then fresh decision. So right now there is no such proposal for consideration of the board.
And lastly, Mr. Mishra, just wanted to have your take on the divestment, because reports suggest that Centre is now planning to divest its stake in the company in small tranches instead of larger blocks. Any clarification that you would like to share on government's Hindustan Zinc divestment plan and any timeline?
No, first of all, I am no one to share clarification on what government is doing. What I hear from the market and from various interactions that I have, yes, a government share of 29% for a $16 billion market cap company amounts to about 48,000 crores. Now, for 48,000 crores for Indian stock market to absorb in one go is next to impossible. So perhaps small tranches of 5% or even lower would allow the market to absorb that amount of shares and pay the right price for it. And as the float increases after divestment of any tranches, automatically it will find its new level of share prices, and further tranches they will be able to sell. I think that is the strategy they will adopt. But I am no one to comment. It's all depends upon what government decides on the face of whatever the realities are.
All right, point taken. Thank you so much, Mr. Mishra, for joining us on the show and talking about the earnings as well as the way forward going ahead for Hindustan Zinc. And with that, viewers, we are totally out of time in this edition of Buy Now Sell Now. Once again, from the entire team of Buy Now Sell Now, happy Dussehra to all of our viewers and see you on Wednesday.